All right. Welcome, everyone, and thank you for joining us today. My name is Monica Harper. I'm the Executive Director for the AACFB, and I'm excited to moderate this important conversation today. We are talking about something that doesn't always get discussed openly in our industry, how to build value and ultimately exit a brokerage. Whether selling is years away or not even on your radar, understanding what drives value gives you more options and more leverage as a business owner. We have three outstanding panelists joining us today who all have experience in selling brokerages. First, Bud Callahan is a past president of the AACFB. Bud began his career in the automotive industry in 1968, earning Ford Motor Company's Grand Master Sales Award 5 consecutive years. He later founded Ambassador Financial Services and went on to serve in leadership roles before re-entering the leasing industry in 1998 as vice president and general manager of Dellin Financial Corporation, which became National Equipment Leasing, where Bud served as president. Bud recently retired and successfully sold this company, so he will share that journey with us today. Next is Chris Chiappetta. Chris is currently with Rinaldi Advisory Services and previously co-owned National Machine Tool Financial Corporation, along with a premier equipment distributorship. Under Chris's leadership, the company evolved from an independent lessor to a portfolio-based enterprise with diversified funding sources and strong relationships with banks, captives, and global manufacturers. His company was successfully sold to the fourth largest community bank in Illinois, and he later scaled that bank-owned leasing company into one of the top 50 bank-owned leasing companies in the United States. Today, Chris advises business owners on valuation and exit strategy. And finally, Jerry Oestreich. Jerry entered the equipment leasing business in 1979 and later opened his own brokerage after working with Beneficial Commercial Corp. In the 1990s, he became one of the founding members of the NAEOB, which is now AACFB, and later served as president of the board of directors. He sold his business to First Niagara in 2004 and then later launched ABC Leasing and Financing, which he continues to operate from his home in New York. So as you can see, everyone on this panel here has experience in what we are speaking about. So let's jump right in. Chris, I wanted to start with you and just ask you a few questions to get started. So when a broker says, "What is my company worth?" how do you begin that conversation?
Well, it's kind of interesting. My point of view is going to be I was a one-man show broker before I grew into all this other stuff and sold my company. And it's real difficult to talk about what a company's worth without finding out the history of the company. What's their average term? What's their average value? What's their annual volume? Who are they doing business with? Is it vendor business? Is it vendor driven? Is it direct driven? So it's a real difficult answer to give right away. But what we tell everybody is what we like to do is as a consultant, do a 5-year projection. What we also tell people, if you really want to know what your company's worth, you need to work with a consultant, somebody who's done this before, because everybody's going to value their company a lot more than it's really worth in the market. Believe me, I know that because when I sold my company, when I was approached, I wasn't looking to sell my company. If somebody would ask me what my company was worth at that moment in life, I probably would have gave a number probably twice of what I ended up negotiating to, because I really didn't have an idea what it was worth, and I needed a consultant to help drive those numbers.
It's kind of like that, what your house looks like to you versus the buyer versus the realtor.
And versus the area,
Right.
yeah, absolutely.
Great. So from your experience, what are the primary drivers of value in commercial finance brokerages?
Well, again, I'll be speaking specifically about a brokerage, but volume is for sure one of the most important things. Industries that you're in is probably the second most important. What businesses are you doing? Because the prospective buyer is going to want to know what's your volume and what industries are you in before they even start talking about yield, term, and other things. But I would say besides industry yield and terms, the personalities, the reputation of the brokerage in the industry, and how data is being collected. Because I'm sure everybody that's listening here has been hearing about data and collecting this data. It is very important because they want some kind of proof. As a broker, all I had were these tax returns. And at the end of the day, I took all the money out. So it was real difficult to come up with any kind of value or have any information other than the set of tax returns that I was going to give them, or my QuickBooks that would say, here's the volume, here's the profit I made each month. That's not enough information. You need more information. You need who are your customers? Where are your customers located? Are they strictly in the West Coast? Are they in the Southwest? Or are they out throughout throughout the country? And can you tell us how many customers you have in each state? So that kind of information is really important to grasp and get hold of to create value, because that's what we're trying to do. We want to create value. So the more information you have, the more value you can create.
Mhm. So, how do buyers typically evaluate the revenue versus the earnings before interest, taxes, depreciation, amortization, all of that?
So I'm again go back. So it's really difficult because as a broker, I had zero at the end of the year. There was no income. I didn't have any interest. I didn't have any depreciation. Oh, I did, my car.
Mhm.
And I'm speaking because I have a feeling we all have had the same kind of setup. My car. I didn't really have much amortization. So you don't have much information. So I'm going to go back to, if you could do it yourself, have a 5-year projection based on what you're doing today. And then your projection is going to be based on what you believe that bank's cost of funds are. And then you could build it out and say, okay, now here's what my revenue is after EBITDA. It's a simple thing to put together, because the other way around is just, it's hard to put value on that.
Yeah. So, how important is reoccurring or repeat business compared to transactional deal flow?
Oh, everybody wants to know that you have a repeatability with your vendors as well as your customers. That, your customers are coming back to you over and over again, and your vendors like you, and they keep on coming back to you with their customers. That's a beautiful story to tell.
Mhm.
That you have this great repeatability, that your business is not just, you're not you are hunting every day, but you're trapping over here because it keeps on coming in. So they want to know that it's a reoccurring business is going to continue, not that you have to find new business every day.
I would imagine that that's really the goal for a lot of brokers, is that after a while they don't have to pound the pavement as hard. It's just the repeat customers are bringing it in, and I think that's why some of our brokers are stay in it so long, and they say I'll never retire, because why would they? They're not have to go out and get the business. It's just coming to them.
It's coming
So
to the well. That's how I grew my business. I once had had my customers and my vendors giving me business. Well, I hired somebody to go find a new business. I didn't have time to find new business. So that's how I kind of grew the company. I
right.
had my business that I was filled. I couldn't do any more if you wanted me to. That was the ability to hire somebody. And
Hmm.
then once they got busy, then we hired the next person. And that's how we kind of grew the company. Once everybody kind of hit their plateau,
Hmm.
we then we looked for the next salesman, or eventually we had to get credit people and
Right.
documentation people, because we were
Right.
becoming more than just a broker.
So, what are the biggest misconceptions brokers have about their company's value?
When I say we, that's me. We all going to way overvalue our company, what we really think the value is worth. Just because it's our company. We built it. It's ours. This is what it's worth.
Your
But
baby's the cutest and the smartest.
absolutely. So at the end of the day, what's it worth to the real world? That's where, you know, the broker has to realize this is what the world is looking. And at that moment, he may say, I don't want to sell. It's not worth. If I believe this is the real value of the open market, I would rather just stay where I'm at. I'm happy. I don't need to go work for somebody.
Mhm. What's the most effective way to quietly identify and approach potential buyers without disrupting your team or market relationships? Like if you're
So,
dipping your toe in the water.
yeah, so there's only one way. You hire a consultant That's their job. That's a tough hill to climb for you to try to find somebody. And what's happened is that when you call those people and they're not interested, now they know you're trying to sell your company, and you may have
Mhm.
divulged a little too much information because you're just picking up the phone and calling. And that's just a tough hill to climb. I personally wouldn't do it. I would look for somebody else to do that for me on my behalf. Then they could bring the potentials to me, and I could just say no, no, not interested, not interested. Oh, that one makes a little sense. Let's have a conversation.
Mhm. Yeah. Um, so for our members listening today, what are two or three things that they could start improving immediately to increase the valuation over time? If
Well,
they have a little time
sure.
before they're
So,
ready.
I mentioned it earlier, data. You want to collect as much data as possible so that you could prove your value because you don't really have a balance sheet to prove your value. You may have a little balance sheet, but not enough to prove what you really are worth. So getting as much data as possible, because what's going to happen, you're going to present yourself with all this data and a 5-year plan showing them what this growth is going to look like, and this is why my company is worth X. And they all go together.
And I think in some of our previous conversations, we had discussed trying to get some of that information from your funding sources just to see, how the deals that you have brought to them have performed. That's something that you could.
Yeah,
Um,
so I agree with you there, Monica, when we had our conversation last week. So in my time, lenders did not want to give me that information. I mean, but what I could get from them is a letter that said Chris's total volume was $10 million. His delinquency is 3%. His bad debt was X. That's the most I could get out of majority of my lenders. But what I found out last week is lenders are willing to give more information to the broker. And that's a big step because now it's not your money, it's somebody else's money, but it's data points that acquirer wants to know.
mhm,
That's great information. And for most brokers, if they're developing a relationship with a lender, I think that should be one of the things they should try to get early. Say, listen, I want to do business with you, but is it possible to get information how my customers are performing? I need that information, especially when you want to get your first line of credit, because that's something I would say one of the things you should try to get is a line of credit to prove the lenders, it doesn't have to be large, that you know how to manage $1 million line of credit, and then figure out how you're going to grow from there. My first line of credit was it took us 10 years of business to get a $300,000 line of credit. And I had to put $300,000 in the bank to get that $300,000 line of credit. So you have to start out small, but it doesn't matter how small you start off. As long as you have enough information to prove to the acquirer, here's what it's going to look like 5 years from now. And here's all this information I have today to prove to you I can get to those data points or to that business plan I'm proving to you that I can get 5 years from now.
mhm,
I will tell you that most lenders, acquirers are not going to want to pay a broker a big lump sum up front. It's going to be earned out over time. Some brokers will get something up front because they have some kind of value that they've proven that there's something up due up front. Others will get paid over a course of time. It really depends on the negotiations of what the broker has. But I'm trying to give an idea of what because everybody will say, well, do they give you money up front and how much can you get up front? That's a real tough question.
mhm. So when a company says they want to merge with you, how do you protect your database and avoid giving away key leverage before a deal is actually defined?
Well, anytime you're talking to anybody about your organization, and about you want to first of all you want to have an NDA signed, a non-disclosure agreement signed. That doesn't prevent them from doing something offhanded, but it should be a document that helps get you along. But you're not sharing all your information. You're not saying, "Oh, here's a tag. Here, I'm going to download all my database and give it to you." You're really inviting them in. You're opening up your computer, and then you just show them. I have 10,000 customers. Let me show you what a couple of them look like. Let me show you the information I'm collecting on the customers. But you're not giving them enough data so they can ruin your business. You're just giving them a broad stroke of what your business is like, and they're doing the same thing to you because if you're merging with somebody, they're going to have the same feeling as you. I got to protect myself. So everybody's just going to do this broad stroke. And I call it the letter V. You start at the top and you work your way So all of a sudden, you guys both agree, and now you're sharing information, even more information. You broke bread, even though you have the NDA. Now you're willing to share more information.
Hmm.
But again, I would say, just be careful who you're talking with, and make sure you feel comfortable enough with that company that you want to merge with. And most people, if they're merging with another company, it's because they were friends with them. They did business together. They shared. Somebody could discount. Somebody had a lender that they could give business to. They could sell to that lender. They have a transaction that, and somebody else. So I could see how. I mean, I developed a lot of broker relationships with other brokers, and we shared because some people had lenders that others couldn't get.
Hmm. Yeah, and now we do have some brokers that collaborate on things on a routine basis, and so they may know how that brokerage works and feel very comfortable with how they're going to continue on the business if they decide to merge or buy it out.
Oh,
Um,
absolutely.
so now that we understand the valuation mechanics, let's talk about what actually happens. We have all three of you guys have experience with selling brokerages. Jerry, I want to get into yours. What made you first think about selling your brokerage?
Actually, the first couple of times actually that I thought about selling my brokerage was when I had other people approach me to see if I might be interested in selling my company. One of them was a company from Maryland, and he didn't really understand that I didn't have a portfolio, so he
Mhm.
wasn't interested in the business after we talked further. The same thing happened with another leasing company from Buffalo. Same thing. He didn't know my business at all. He asked me how big my portfolio was. I told him I didn't have one. That was the end of the conversation.
Mhm.
And because I had a my business was very much focused on repeat business with customers, and so I wasn't spending a lot of time, as much time out finding new customers as I was just taking care of the ones that I had.
Mhm.
And I mean, over the years, I had uh, 12 companies that did a lot of deals with, sometimes over 100, before they sold out for over $1 million. And one of them was, well, the first one was 304 million. And those are the types of customers that I worked with. So I didn't really do some of the things that some of the brokers have to do. And when, I have to chuckle when Chris says you got to get your own lines of credit and so forth. And I, I did it once, and I realized right away that I was a good salesman, but as a credit person, I really stunk. And I would try to do deals that other people weren't going to do. And didn't take me too long, but it took me a little while to figure out that if nobody else wanted it, why should I do it? And it probably was a mistake, and it was, and I'd have to, I'd suffer from it.
Mhm.
But so that was one of my early lessons in how to not do it. I mean, I had a good business, I got a lot of credit, and I really learned fast how to not do it.
Yeah.
And I can't think of how many other times I actually thought about selling it. It just wasn't something that came across my mind until actually towards the end. I shouldn't say that, because towards the end, I was interested in selling my business. And I had a company come in that claimed that they could help me put my business together and make it saleable. And they were going to go through all my books and all that sort of stuff. And actually, they did that not too long before I actually did sell my business. But I never really even shared any of that stuff with the bank, because they had their own ideas of what they wanted. And so it turned out to be a waste of time. But when I tried to really plan for it, it didn't work for me.
So the question of how far in advance did you begin preparing? Because we were talking about, people that are a few years out from wanting to retire and what you can do ahead of time. You didn't really have a lot of that preparation time because you weren't initially
No,
looking to sell.
all I did was focus on doing more and more and more and more business with my present customer base, as opposed to going out and finding more. And to me, it was the easiest way to do business.
So if you didn't get to the valuation part or maybe you did, but you didn't share it with the company that bought your business, what were they using to evaluate the value of your company? How did they come to that number?
They, they, they really, they were really kind of funny. I mean, they were a bank, And there should have been a lot of things that happened that didn't. But the gentleman from the board that was handling the situation had already handled buying two banks right in my backyard on the opposite end of the state from Buffalo. And so he thought he really he knew everything. And he knew everything about leasing. He didn't need to have a lot of stuff from me. And he just kind of waded right into it. And he came up with numbers. And between my buddy and I, we kind of convinced him that, with 68 new branches in my backyard, he'd be better off having me service all of the leases that were going to be coming from them rather than start out from scratch with a new leasing company. Mm-hmm. So mine was not a real good example of how a company should be bought. It was good for me, mm-hmm. but it wasn't good for the bank because they had an inexperienced person doing the job, and didn't quite work out the way he thought it would or the way I thought it would. Is really what the bottom line was.
So how did selling, because you had several people working for you, how did that affect your team and your existing clients? How did that work out?
Well, it worked out very well because I can't remember, there were 8 or 10 employees at the time. And when I left, they were all still working for the bank. And one of them was my son-in-law. And that actually, because my son-in-law was working for me, it put a lot more pressure on me to really make a good deal because my grandchildren were involved in this now. Right. And so when I walked away, I wasn't very happy because of the way the whole thing ended, because there was supposed to be a 4th-year option that if I was healthy and I wasn't ready to retire, I could work for another year. But that never really kind of worked out because the boss and I didn't get along too well. And it was kind of a disappointing way the whole 3 years went because there was a lot of knowledge that I had that he didn't want anything to do with. He knew everything, and it was a big disappointment, really. And the compensation program that they came up with was very, very lucrative for me. I made out very well on that, but the way it was done in a way that whether I did a lot of business or I did a little business, I was still going to make the same amount of money. Mm-hmm. So there wasn't a lot of incentive for me to really grow the company the way I could have or should have for them, because they were not really interested in my ideas, so to speak. Right. And I kind of got swept under the bus.
We had discussed that before, is that where most of our members are entrepreneurs and you're the boss and you're in charge. Right. You can make all the decisions. And then when you sell the company, a lot of times they'll keep the original broker on for a period of time. And then that can be kind of a odd transition to be going from the person who's making all the decisions to the person who's taking direction.
That's right. Well, and on the same token, I had, as an example, I wanted to get the bank into government leasing because I had a lot of experience in that. I had done a lot of it. And his comment was, it's too risky. We don't want to do any of that. Mm. And 6 or 7 years down the road, that same bank hired somebody who had been with another bank who had a big equipment leasing, a big government leasing operation. And all of a sudden they were doing all kinds of government leasing. But it wouldn't work when it was something that I suggested because I wasn't a high enough level person.
Right. So how long did you stay on? The deal was you stayed on for a certain amount of time?
3 years. 3 years, that was it.
Okay.
Yeah. 3 years and I was out of it. They paid me very well. I have no complaints about what they did pay me, but it was unfortunate they didn't really get exactly what they paid for, I don't think.
Right.
I could have given them a lot more.
If you could have changed anything about that experience, what would you have changed?
I would have changed the way that they would look at, I guess it's kind of like politics today in some ways. Some people just can't even talk about it because they're so pent up in their thoughts and their party and whatever. And with that experience of me selling my business, it was the same way. It was his way and my way. And he really wasn't interested in any of my way down here because he was a CPA, he was a board member, he was an officer of the bank, and I was just this guy that his company he had bought. And it wasn't a very good marriage.
Yeah. So I guess for our people listening, I guess the moral of that is depending on what your structure is of your buyout, are you planning to stay on with this company for a period of time, or are you saying, here it is, I'm out, and really taking a look at that, what that's going to look like during that transition period, to make sure you're comfortable with it and that
Yeah.
it's not, it's going to
Sometimes I
be a
think
situation.
it's easier to think about how you'd like to have it as opposed to how it might really be.
Right.
And I mean, the the best thing for me when I left there was when I sat in this office that I'm in right now. I never had anybody come to my door and say, "You got a minute?" And I really enjoyed that freedom to
Take the
operate on my
pressure
own
off.
and only take care of my customers.
Yeah, yeah. The pressure's off. And then of course
Yeah,
you left that company and you started a new company and just with a different,
yeah,
so that's something to think about it, depending on who's listening on where they are with their business. There are people that are looking to sell their business and then potentially start over in a different segment or a different area or whatever. And then there's other
yep,
people who are trying to transition because they want to retire and they want to get out of it. So there's different reasons
yeah, yeah,
for selling. Um,
yeah, yeah.
but you had a different experience. So you were looking to retire. Is this something that you planned for years, or was it kind of an opportunity that presented itself unexpectedly?
Well, that's a good question. I planned on working until my joke was that people say, "Well, when are you going to retire?" I said, "When they drag my dead rear end out from behind my desk." But and that was pretty much my thought.
Mhm.
One of the things that I did that devalued the company, because of when I had Ambassador, I'll digress just a touch because I sold that business too. I was approached by a bank and they made a ridiculous offer and I made them an owner. But I had three other partners, minority partners. So, we all got a little piece and I had to stay out of the business for 2 years which was part of it. And I went back and helped my dad sell his dealership. And then I got back in and I've been in since.
Mhm.
So I've got 50 years plus in it. Uh, I just couldn't imagine not working. 2008, at that point, I had about 12 or 13 employees. When the bottom fell out in 2008, I had to let everybody go, which
Yeah,
was hard, including a son-in-law.
a tough time.
And yeah, it's hard, but and then I went doing it myself, and I had a secretary to help me, and I worked out of a home office, and I've been working out of a home office since. What happened was I got less. My wife's health was deteriorating, and most the ones that know me, whenever I came to a convention, she was always there,
Mhm.
and you could see her running down. Her health was failing, and so she required more and more attention, which took more and more attention away from work, which reduced my volume.
Mhm.
So I did sell it. I probably, if I had sold it sooner, I could have sold it for a lot more money. But
You were actually not planning to sell it initially, so it wouldn't have made a difference if it was winding down. But if you were planning to sell it all along, you maybe have made some different moves.
yeah, so when it got to the point that she needed 24/7 care, I knew I needed to do something, and I thought, well, maybe I better sell it. Now, the opportunity was I wasn't doing, hey, in 2025, how many of us were doing a lot of business? Just be honest. I wasn't doing a terrific amount of business, but I was pretty involved in medical, and medical is kind of recession proof. It just kind of keeps going. People keep getting sick.
Mhm.
So I was approached. I actually, I it was a mutual thing. A good friend of mine who's been in the business forever and ever, and if I mentioned his name, you would all know him, died about 2 years ago. And his son, who was in the business, was a little green, and Daddy was his resource. And whenever he got stuck in a deal, and he'd ask Daddy, uh, I kind of filled that void for him. Nice young man. The thing that I appreciated, and anybody that's in a position similar where you're trying to wind down and just plain retire, make sure that if you've spent a lifetime building a business, whoever you sell it to should have the same ethics, the same attitude that you have, and will treat your basic customers, because they're going to get that. I have 6,000 customers in my database that transferred. Now, some of those are dead, and some of them are out of business, but a lot of them are still active. So I want to make sure that those customers are treated the same way I would have treated them. And so who I would sell it to, I think would be, if I were selling and if I were in your position, I would be careful who I did that with. Now, what's happened? The sale is complete. I don't get bothered too much, but he gets stuck sometimes and he calls me. What do I do with this deal? That's fine. I have no problem with that.
Mm-hmm.
I sold it for a price that I felt was comfortable. Uh, just for those that are thinking about that, you don't pay capital gains tax until you hit $98,000. So I made sure that I'm not getting $98,000 per year.
Right.
So, and it's less than that actually. But that's kind of your bogey number if you want to not have to have that taxed. So if you're working that out and you want a multi-year plan and you want a stream of income over and above your Medicare and any other income streams you might have, that's another way to have an income stream and from the business, and not just have a big chunk of money that you got to pay taxes on.
Mm-hmm. Yeah, that's
So
something to think about how
that's
you
worked out.
structure the buyout.
Yeah, and that's worked out pretty well. Uh, right now, I get called 2 or 3 times a week, maybe. I still have people from the association call. They think I'm still going at it. Help me. I don't know what to do with this deal. And that's okay. I'll do
Yeah.
that. Yeah. So
Uh,
I'm retired, but I'm not gone.
yeah. Well, we're happy for that. Um,
And
so
as you know, my wife passed away, so I changed things in
yes,
that process. But
yes. Um, so when you weren't looking at any, you didn't go out to look for people to buy your company. It more was a existing relationship that became a mutually beneficial situation.
I've probably been approached about 20 times
Mm-hmm.
through the course of the years, and I'm probably everybody in this group here have probably could tell you the same thing. You get approached now, how serious they are, how realistic they are, and how much passion they have is a whole nother story. But I never took any of those seriously because, frankly, I had no interest in retiring.
Right. Right. So what was the most challenging part of negotiating the deal that you ended up making?
Well, the good thing is there was a strong trust relationship.
Mm-hmm.
I involved something, Chris, that you said, having a non-compete. I would encourage, don't use a boilerplate. I'd have an attorney write it. In this case, I did, which is Ken Green, which a lot of you guys know.
Mm-hmm.
I had him write the agreement, and we were both comfortable with it. And so we did the sale. Uh, Actually, the sale just completed because uh, this started like in May that he took over, but we didn't finalize it I held on to 10% of the company until the December 31st because for tax purposes, I just didn't want to file two tax returns in the same year.
Sure. So you had both kind of a little bit of an earnout situation, a little bit of a transition period. Some people like Jerry,
Yeah.
they had like a
Yeah.
3 year
So I got a stream of
transition
income
period.
for several years.
Yeah, nice. So on a personal level, on the emotional side of selling your business, what was that like for you?
Well, I had an opportunity to work with him for a while before this happened. And I had confidence in his sales skills. Um, I'm a relationship type salesperson. In other words, I have to believe in what I'm doing. I can't do it otherwise. If I can't, some people can just sell anything,
Mhm.
whether they believe in it or not. I'm not built that way. And this, I don't know if I should mention names, but I mean, you can look it up and find out easily. But he's built the same way.
Mhm.
He's a relationship salesperson, and that's what I think builds long-term relationships with your customer base, because if they know you as a friend, they're going to come back to you.
So what
And
advice would you give to brokers who are maybe a little farther out from selling, maybe something you would have done differently if you had intended to sell? Um,
well, sell the volumes high. In my case, my volume had worked down, which would have had reduced its value, but that's okay. I had a job. I still got a paycheck. I still got paid. I made money. So Uh, would that have worked out much differently if I had sold it sooner? If I look at what went in my bank account, maybe not. But you know, I did what I did. It felt like it was right. And if you want, but if you want to make more money, sell sooner.
right.
Sell while the volume's up. Don't let it start gearing down.
So I want to jump back to Chris, because I know you are working as a consultant now, but you did sell your own brokerage. What was the situation and the process like for you when you sold your brokerage?
So it's kind of a little different story. I wasn't looking to sell, had no valuation. Um, I got a call from a consultant who I've known for 30, 40 years and said, "Hey, do you want to sell your company?" And I'm like, I don't know. He's like, "Well, it's really interesting. The bank you've been with for 20 years is looking for a company to buy." So that's why it's a little bit different because at that moment in life, it's the bank who's known me for 20 years, who got rid of all their equipment finance lines of credit when 2008 hit, but us. They
Hmm.
kept us. I just happen to have a good relationship with the president of the bank and of actually not of the bank of all the little regions. So everybody kind of knew me, and so I didn't have to do a lot of work proving value. They had 20 years of tax return. Really, what they had was 20 years of first tax returns on a tax an accrual basis. Then they got tax returns that were done differently. Then they got financial statements. Then they got audited finance. So they could actually see the growth of my company, how we went from just doing QuickBooks through tax returns to having audited financials over that whole period of time. And so it was a
They
whole
knew your
different,
business to
they
begin
knew the business. So it was a whole different process. But I made it pretty clear. I don't want stock, I want cash, and I want an upfront.
with.
I will tell you that right now. So it was definitely a different sell. But again, it was brought to me through a consultant. I mean, literally, the first thing I said to the bank when they came in my office is like, why wouldn't you call me direct? I am the only company that you're lending to. We could have cut, we could have just done this direct.
Right.
But that's how that came about.
So did you stay on with the company after, or was
Yes,
you're
most
gone?
just look, most banks, anybody who's giving you money up front needs you to stick around for a minimum of 3 years.
Mhm.
A minimum, because they're giving you money. They,
Right.
they, they, I'm sure it's happened where somebody bought the company and the owner could leave right away. But typically, we're talking a broker, which basically the owner's the guy. Really, he's the guy who's running everything. He's the main person. He's the one. So typically they want them to stick around for a minimum of 3 years. I stuck around for 7 years. But I will tell everybody, because you guys have mentioned it, when you do sell your company, you're no longer the decision maker. Usually there's a honeymoon period where everything looks, sounds, feels, and looks exactly the way you thought it was going to be. Mine, I had a wonderful honeymoon for 3 years until all the bankers who were involved with the champion of the acquisition, they all retired. We got new people brought on from these big banks who knew everything. I can't remember if it was Jerry or Bud, but somebody saying they know everything. Well, these guys came on board and they no, they knew more than I did, and so uh, um, the last 3 years were pretty difficult. Um, then what I do tell people, especially if they're getting close to retirement age, is if you sell, sell for enough so that you can walk away if you need to. So I can't do this. They gave me enough money up front. I don't want any more. I don't need to earn out. I don't need whatever they gave me on the back end. I don't need. I can't, because it is difficult. I owned my own business for 30 years before we sold it. It's a complete different feeling once you sell.
Yeah.
And that's how,
So,
and Bob, I'll just bring on Bob Rinaldi. So what was happening was I've known Bob throughout my whole years because really, I sold paper. I was a broker, but even when I had lines of credit, my whole goal was at the end of the year, if I could turn that line, I'm doing it. So I knew Bob throughout the whole years and his brother. And when I sold the business and I started getting, after the 3 years, I started getting the things, I just reached out to him and said, I'm having difficulty here. I don't feel like I'm in control. I feel like I'm chasing the train now, who no longer wants me on the train. So it was a different feeling. And I just want to let everybody know that selling your business is a wonderful thing. I mean, at the end of the day, would I do it again? Yes. Wouldn't even think about it. I
mhm.
would do it again. I may have done some things differently about how long is the management going to stick around? Are they going to be there as long as I am? Or are they going to be leaving sooner than me? And there's certain things that I've learned through that process, but I would definitely do the same
So
thing I did.
how early should a broker realistically start preparing for the potential exit? Because, like you said, I guess, and part of it depends on, are you selling to a bank? Are you selling to another broker? Who are you selling to? And maybe you don't know that originally. But then do you think there will be that transition period where you might be working with the company for 2 or 3 years or so? Because if you wanted to retire in 3 years, and you have a 3 year where you need to transition, then you need to sell today. So
Exactly.
what do you think is the realistic start point?
So that's an interesting question, and I'm sure Bud and Jerry have a different reply. So in my case, I was always looking for lines of credit. I didn't realize that I was actually getting myself ready to sell. That banks, my whole goal was to have enough data, enough financial information. I get my first line of credit, then I get my second line of credit. And then as I grew, I had to get better information to give them to get the lines of credit. So I would say, you know, don't think about the exit so much as in how am I going to grow my company? Because the more you grow your company, that's the way you're preparing for your exit anyways. There's no real way I could think of is to prepare yourself other than growing your company, trying to get that first line of credit. I know Jerry didn't like that, but that's the way I've always felt you should grow because you prove to everybody, I have my credit team, I have my collection team, I have my sales team. I could do it. I could do it. I could approve my own credits. I had my own authority. It was my own money. So I'm going to treat your money like it's my money. So that's why I always believe if you try to get that first line of credit, it's the same thing as preparing for the exit because you have to do all these steps to get there.
Mhm. And
I
Jared,
don't know what Jerry and Bud think about
yeah,
that.
Jared, but what do
Well, I had a line of credit. I had $1 million line, uh, which required me to hire extra staff because you got to do collections. You have to deal with sales tax, county taxes, all this other stuff.
Mhm.
And when the smoke cleared, I really didn't make any more money doing that than I did just brokering it. So I let the line dissolve and let the money run off, and I just downsized and stick with brokering. That was just a decision I made.
Mhm. I guess depending on, in
I
my
guess it's been there,
situation, you
done
weren't
that. I guess you
planning.
could, yeah, once you get the million, then you can get to the 2 million, 5 million, 10 million, and just keep growing until you're somebody. But
In your situation where you weren't planning to sell, so I guess there's a different mindset for people that are not planning to sell as people that are planning to sell. Jerry, what was your experience with that?
Um, I only got up to $750,000, but what I decided was that it lending money wasn't really, I wasn't good at that. And I started it at a time when I was dealing with a bank in downtown Albany that all of a sudden had a big fraud case, and the board of directors made them stop doing anything new. And I was one of the new kids on the block. So they stopped approving all my vehicle deals. And the vice president down there said he thought it'd be going again another week or two. So I started borrowing money to pay for the deals that I was approving that I knew they would approve. But then they never started approving deals again. So I was stuck with it, and I didn't like that feeling. I just didn't. I did a lot of deals with private investors, and I was okay with that. But I didn't like being on the hook myself because I wasn't good at that side of the business.
Right.
Well, one thing I want to kind of talk about lines of credit. What the first reason why we got lines of credit was to pull the deal off the street. So those deals that went on the line of credit was really what I would call a warehouse line of credit. Those I'm
okay.
not hanging out of those deals no more than 6 months. My goal is to get rid of the deal. So when we first got our first lines of credit, we were only going to approve deals that we knew we could sell to the open market. We weren't going to do a deal no one else could do. That's not the business I wanted to be in. Um, did I get into that business? Time went on. Sure, as my lines of credit grew, then when it came to certain collateral that I knew inside and out, then I was willing to take the risk. I never took credit risks. I always took collateral risk when I had my lines of credit. So I just want everybody to know the whole reason about getting your line of credit is not to hold this paper and then you're on the hook for the 5 years. Use it as a warehouse to get it off the streets quickly because as a broker, that's the biggest issue. I remember I hated losing a deal while I'm waiting for the answer that I should have gotten 2 days earlier. I could have said yes myself, but I didn't have the line of credit to say yes. That happened 1,000 times a year for us. So that's why we got the line of credit was to put it on, take it off, put it on, take it off. And then as you grow, when you grew to 2 million, you're still doing the same thing. And then eventually you're like, I'm hanging on to that particular deal. We were able to write at a high enough rate and it's a good enough credit to sell. I'm gonna hang on to it. I can still sell that anytime I want, but I'm going to keep it. I'm gonna keep it as a permanent transaction.
So we have about 10 minutes left. I want to go ahead and take some questions from the attendees, and we have 3 already. If anybody has any questions right now, please type those in the Q&A box, and we'll get them answered for you. So the first question is from Sean. What type of multiples are you seeing for small broker shops versus large broker shops, discounters, lenders?
So on my end, I'll just speak for me. Uh, Independents who have the lines of credit and financial statements are getting between 5 and 8 times. Um, that's the multiple between 5 and 8 times. A broker, I'm just going to tell you the truth. I don't know what the multiple will be, other than trying to come up with that 5 year plan and coming up with what you could get up front, and then having these earnouts because you have a financial statement saying if I hit this number, I'm going to get X. If I hit this number every year, you're going to get X. I don't know if there's a true multiple out there for a broker. I mean, Jerry and Bud, you guys may feel differently.
Well, in my case, there was a quasi number situation that if I hit that, then I could make more commission, but nobody except the guy who put the numbers together could ever figure out what it meant. So it was useless to me. And so I never had any, I got all my money up front and I didn't worry about increasing the volume because they weren't going to reward me for it.
Yeah, I see that.
All the customers, my salespeople.
So when you sell the buying company should bring value to the company's current database? That's the question. So when you sell, the buying company should bring value to the company's current database. So I guess that's relation to if it's a brokerage or if it's a funder or something, or what are they bringing to the table, or are they just buying the broker's database and taking it over? I guess in your all situation, they were bringing something to the table to grow the business.
So is this a merging broker to broker question?
It didn't say specifically, but it just says when you sell, the buying company should bring value to the company's current database. And that's the question. Should the buying company bring something to the table, or is it just you're bringing all the value as the brokerage, and they don't have to prove that they have anything going on?
Oh, they're bringing you a lower cost of funds. That's for sure. I mean, if it's a bank,
Mhm.
they're bringing you a lower cost of funds so that you could mine your own database immediately, mine all the rejections were the deals that you lost because of rate. I mean, literally, it's just, so you can mine your business based on your new cost of funds. Because how many deals we all lost because somebody came in with a better rate? I mean, I'm just, the more I talk, the more I start, these feelings are coming back that I used to have that I hated. And I'm 65, so, but
Are
truly,
we bringing up past trauma?
yes, I mean it's no fun because you work hard to bring that deal in just to lose it, to a lender who has these low rates.
Mhm.
So that's typically the value proposition the bank brings, and they typically are going to bring a proposition of growth for you. Um, I mean that's what you should be looking for. What are they bringing to the table so I can, take care of my people? Because the whole goal when I did sell the business. I immediately wanted to make sure because most of my employees were with me for, I think the youngest employee was 15 years. So I wanted to make sure everybody got vacation pay because I was a small company. Everybody got 2 weeks. I
Right.
literally, when I sold the company, everybody got 6 weeks vacation immediately because you want to take care of your people and you have to figure out ways to take care of them and give them, in this case, they got 6 weeks vacation and they all got a 25% raise in salary.
Good deal.
That's how we were able to cut a deal with the bank. I mean, so that was a value proposition I was able to bring to my team other than me just putting money in my pocket.
Hmm. So what is the multiple? What multiple is typically used to determine value? Is a multiple of is it a multiple of the EBITDA revenue or something else?
No, EBITDA revenue. No, on a broker, it's going to be something else because you're using all kinds of information to get to this value. Like in Jerry's case, they decided to come up with their own little multiple that Jerry felt comfortable with. And I think that's what's going to happen when the buyer really wants the broker. You're going to come up with something that may not be standard for somebody who's looking for that 5 times, 8 times multiple, but it's something that works for both the bank because whoever you're talking to still has to present it to the board of why they're buying you for X amount of money. So there is a way to get there. There may not be a multiple. I don't know, Jerry. I mean, you said
You
it once, but I'm assuming you had the kind of same answer.
Yeah, I mean, in my case, the guy was so smart he didn't need numbers at all, literally. I couldn't believe how simple it was and how lucrative it was compared to what I thought it might be. So I couldn't complain.
I hear you.
But did you have anything to add for that?
Well, I think my case was a little unique too because uh, I'm a Vietnam veteran and I have total disability, but total disability, what they call TDIU, comes with strings attached. If you make more than $21,000, they take all your VA medical benefits away from you.
Mm.
At 80 years old, that's a little terrible to imagine.
Yeah.
So that that in itself made it this is the time to do it.
Mm-hmm. Yeah.
So,
So next, Tom wants to know, how did you find a consultant that knows our industry and the people who are interested in purchasing a brokerage? So who is connected in the industry that knows who's looking to buy and sell, I guess.
So I'm not gonna. I mean, you guys have several brokers. I think besides Bob Rinaldi and myself at Rinaldi Advisory Services, you have that Scott Wheeler.
Mhm.
I
Yes.
mean, literally. So I get a little jealous because 40 years ago, no one existed to help us out. There
Right.
wasn't people trying to help you get lines of credit. Everybody was an ELFA member and looking for those big companies to help them out. Literally, it was the most difficult thing. And today, I think a broker has a lot of things at their fingertips that I get jealous a little bit.
I
You know,
will say,
I remember I used to fax one page at a, we didn't even have fax machines. And then when they did come, it was a one pager at a time.
a
Yeah.
while back,
Yeah.
we had this conversation come up on our online community. And from that, I started a spreadsheet of one tab was companies that were looking to buy brokerages, and the other were brokers that were toying around with selling. And so I'm not trying to be matchmaker, but if you're looking to sell or you're looking to buy, let me know. I can tell you who's looking to buy or looking to sell, and you can work it out between the two of you. But that has just sort of evolved from some of our online conversations with our members. I know we had a situation where we had one of our members passed away, and his family was keeping up the brokerage, but they're at a point now where they don't no longer have the ability to keep it going, but they wanted to see if they could sell the database. And so I've put the widow in contact with a few companies that were interested. And sometimes in that situation, it was a broker that just wanted to buy the database. So it could be a situation where you're just trying to say, look, I've got a bunch of customers and I'm willing to sell you my list of customers, and here's how much I think that's worth. And I'm just going to sell that. I'm not going to stay with your company. I'm not going to consult you. I'm just going to give you the data and sell you the data. Because in this situation, the widow is not interested in continuing on having a long situation, and they're not the expert in the industry anyway. So there's all kinds of different situations there. But
yeah.
if you want the list of people that I have, I'm happy to give it to you.
Yeah. Sometimes I don't know who this is, and it's none of my business, but oftentimes, besides the database, a good name of a company has value too.
Yeah.
And in my case, that came into play. Uh,
Mhm.
had a good reputation. I tried to keep a good reputation, and it had value.
I agree with Bud. A go-to-market strategy with, company name, logo. I mean, all that stuff does play in. I mean, it really does.
Yeah, especially if you had, I would think, maybe a newer brokerage, that somebody who, like, it's kind of like franchising. You want to come in, you already have the Subway reputation and you've got a location, you're just going to come in and buy it and run it. And some people might be interested in that. So next question, how did you rationalize making a percentage of the margin versus the entire commission after you sold?
Monica, can you repeat the question again?
Yeah, I was going to say I got a question mark.
Yeah. How did you rationalize making a percentage of the margin versus the entire commission after you sold the company?
Oh, okay. Well, from my point of view, everybody got larger salaries, and so their commissions were smaller, but it was offset by a larger salary. I understand that question now. Sure, because if you made $10,000 on a deal, you got the $10,000 for yourself. Or you may had to give half of it to your salesman, but you still got half of it. That's, I see that question, but it's a different ball game. You're not really thinking about it. Because if you have this acquirer and he's already pretty much giving you what you wanted on the front end, you're just moving forward. You're not thinking about, oh, and I'm losing on some commissions. And, you're just thinking about how I'm growing this company because you should have at least got a larger salary, or so you're not thinking about these commissions that you're not usually getting anymore.
Mm.
I don't know about you, Jerry or Bud.
Well, my salesman made a lot more money after the bank bought me than before. And in fact, they had to change the compensation system for the salespeople there after I left because they were starting to make more money than some of the bank officers. And it was really raising eyebrows. But all of that never affected my pay.
Exactly.
This question for Chris is 5 to 8 times of what metric? I think this was based on an earlier question.
Say that one more time.
It says 5 to 8 times of what metric?
Earnings
Earnings.
before taxes.
Okay. This is to all of you. What was your best sales trick to use when trying to compete on price?
That's a difficult question. I mean, is it a vendor question or is it an end user question? Because the end user is just going to go with the guy with the lower price. Unless you've actually unless you've been with them and you've actually loaned him money when other people weren't around, and now he's a stronger company. And now he's looking at rate and you may not quite have it. I'll remind them what we did for you in the past, that that bank who's giving you a lower rate today wasn't there 3 years ago when I was there. I mean, I would call them out on it now. I may not get the deal anyways, but at least I would call them out on it. With the vendor, that's a different scenario. There's more value propositions with a vendor, because a broker, in my opinion, could get more deals done for a vendor than a single source lender. When I sold my business, I still ran it like half my business was like a brokerage. If it didn't fit my credit policy, I was still approving that deal and selling it in the open market because I didn't want to be the lender who only did A and B paper. I still wanted to get the C's done. I couldn't do the D's, but I could still broker the D's out. So I was still a broker on D paper being owned by a bank. And then the A's and the B's and the C's I still bought and then sold the C's out there because whatever the bank's policy was. But I never really changed the way I thought about. I was always a broker, always.
Jerry, Bud, do you guys have any insider?
And so what I would do is I would get a commitment out of that customer for a lower payment. And then I would go and find a lender that would allow me to sell with that payment and still make some money. Because I always had a lot more lenders than I did customers.
Mm-hmm.
Mm-hmm.
Well, the question depends on the deal. You got to look at your deal first. If you got an A customer, then I always try and wound them. I knew what kind of rate I'm going to get. I know that already. So
Mm-hmm.
I'd say, okay, now here's where your payment's going to be. What do you think? I do that out front before I ever had an approval, just to set them up for it. And if they say ouch, then I have to go into my explanations of who, why, and how, and that's where salesmanship comes in. Sometimes you get them, as Chris, you said, sometimes you don't.
Mm-hmm.
But I think everybody has their own sales style. I can't tell you what works. I know through my sales career, probably my process is a collage of a lot of good things I heard other people do and think, oh, I can do that one. So I've picked up things along the way, but everybody has their own style.
Mm-hmm. Yeah. So Scott wants to know, how long should a broker be in business and sales volume they are doing to consider selling? So is there a time in business? Do you need to be in the business for 10 years, or would somebody want to buy a 5-year-old brokerage? What would your thinking be on that?
Well, for me, I think it would just depend on the situation. You could be 1 year in business, but you happen to be that type of person that fits this bank and he wants that kind of a leader and he's willing to pay a little bit for it up front. And, I mean, so that's a tough question to answer. I would say 1 year in business, 10 years in business. It really depends on the situation of the lender.
So, Chris, what you're saying is they're not buying a business, they're buying a person.
Yeah.
Mhm.
If they've been in business for a short period of time, they're definitely, remember I mentioned earlier, personalities and that's really
Right.
important, especially when you're small and you don't have a lot of information to give somebody. A lot of things playing the game. One thing I do want to mention that we did that I want to tell brokers to do, we kept track of every deal we lost because there's value there. Because I could say, listen, the last 10 years, we lost $250 million of business due to rate. And if we had this rate, we would have kept that 250 because that's a value that a bank needs to see because all of us lose deals due to rate and there's value there. Keep track of those deals. It's important, especially if you don't have enough information, you're still a true broker and you're trying to develop value. There is value in lost deals.
Let's see. I think, going back to the previous question, they were clarifying that they're talking about the vendor. I think that was, I can't remember which question that was.
Yeah.
Um,
Yeah. If that was the question about, the rate,
mhm,
I think I said earlier, I think the broker has the best value of anybody. I could get most of your business done because the vendor at the end of the day is worried about his sale and nothing more, nothing less. And the broker just has to prove, I have 15 lenders, A from A credits to D credits. And this is my value proposition to you, and this is what makes me better than working with Wells Fargo. Wells Fargo says no, they're not going to try to help you find that lender to do it. That's my job.
mhm.
And that's how, that's the value proposition.
So question is, do you have an idea of what the typical consulting/broker fee is to sell? What would your top couple of questions to ask a potential buyer before spending time gathering confidential information? For example, how much are you willing to pay, etc.
So, as in fees to the consulting firm or as in fee? So typically, I'll just try to use my example of what I did, because that's the best I could tell you of. So when we were selling our company, we had to pay a fee out, and so during the negotiation, I asked the bank to pay the fee. So if you're working with a consultant who says if you sell the company, they're looking for a fee out of it. They're the ones who are working hard behind the scenes trying to find the bank. Just make it so that if you're selling your company for $2 million and the fee is $250,000, then the sale price should be 2,250,000 so that it's not money's not really coming out of your pocket. In my case, we came up with a price and then I asked the bank to pay for the fee. I waited.
Mm-hmm.
I waited till we negotiated the final price, and then I said, "Oh, yeah, by the way, there's a fee that we have to pay out, and I don't want to pay it."
Right. So I know Jerry and Bud, you guys didn't use consultants in your situation, so
No, I
that
didn't.
wouldn't apply. Um, Next question is, who would you sell your deals to on the open market? I don't know if it's sell your deals or sell your brokerage. Not sure how.
Well, where you sell your deals, that's why we have the AACFB. You got about 102 of them.
Right. Yeah. Yeah, definitely the funding sources in our database, that's who I would sell to. Um, as a one-man brokerage, how much cash should I expect up front versus an earnout? I guess are they more likely to pay more if it's an earnout than if it's a cash
So
up?
I kind of want to put it in real simple terms. You're competing with a top-notch salesman looking for a job, and that bank wants to fill it. Top-notch salesman says, "I'm not looking for an earnout. I just want a salary." And you're trying to sell your one man, and he has customers, he has a database, he's buying, He just worked for somebody and you're trying to sell it. So it's a difficult thing to do, a one-man show. But again, it really depends on the situation. And I feel in that particular scenario, unless there's something out of the ordinary, it's going to be more of an earnout and almost nothing up front.
I might add one thing. When I sold Ambassador and it was sold to a bank, several of my people stayed on. And one of the things that was difficult for the bank was when the people started earning more than the loan officers.
Uh,
And that caused real heartburn. And maybe you could speak to that, Chris. They tend to get jealous when salespeople start making more money than they do.
mhm.
I would agree. I would agree they do get jealous. Um, but it's not as big of an issue as it used to be. We had three guys in our company making more money than the presidents of every region, making more money than me. But the kind of business they were bringing in was tremendous. And I had to deal with the CFO and the CEO of the bank, the total bank, but that was an easier pitch because you're proving to them what that particular person's bringing in. And if you change it, we're going to lose it. And why are you changing it? Just because they're making more money than the regional president doesn't mean it's something you change. I personally never had any issue with how much my guys were making. But I did, like I'm telling you, I had three guys making more money than most of the regional presidents, and including myself. And I would use that. You see me upset that they're making more money than me? No, I don't really care. They're doing what we asked them to do. But it does. I will tell Bud's right. Some banks there are issues. They don't. Some people don't like the idea of a sales rep making more money than me, the manager of the bank, the regional bank president. The smaller the bank, the more difficult it becomes. The larger the bank, the less of an issue
Mhm.
it becomes.
This was a follow-up to the where, who would you sell your deals to on the open market? They were referring to Chris selling deals off his warehouse line to the open market.
Oh, so the open market, I mean, literally the same lenders that the AACFB had, the same lenders NIFA had, and the same lenders the ELFA had. That was my market. Um, my job was to know the credit policies of everybody. So I'm assuming that question was based on using your line of credit, taking the deal off the street, and finding a lender for it. Because that makes you completely different than the next broker next to you, because you could do more than him. You could take the deal off the street quicker. You all have the same lenders, but now you could pull those two or three deals off the street quicker. Um, I mean, I'm just tell everybody network. That's all I did is I networked like crazy. And I went to every funding symposium there was, and made sure I befriended those people and other people. I just networked like crazy. That's all I could tell you. That was my open market. But I worked with well, NAELB, by the way. That's those are the lenders I worked with that was at that organization because that's how far back I go. And then as we grew, the funding symposium that the ELFE had worked, but those funding symposiums, I'm gonna tell everybody, those are great to go. Not that you're gonna find a lender today, but I always saw it was a network association for me because all those people you're talking to, they're called capital markets salespeople. They don't stay at those companies forever. They go to another company and then they call you up. They go to another so I would go to every funding symposium possible, befriend everybody as much as possible, because everybody does one thing. They all leave their jobs. And if you're a good person and you do good business with them, even if you haven't done business with them, but they felt that you're a good person, they want to look good in the next job. So they're picking up the phone calling everybody who thinks is good. That's about the only suggestion. That was my open market. I did that for, you know, 25 years before I sold,
Yeah.
all the time, year after year.
And just for anybody who hasn't been around for a while, the NAELB it was our name before we changed to the AACFB, and we are celebrating our 35th anniversary this year. So So we've been around for a while and a lot of networking and funding getting done over those 35 years. I want to wrap this up because I know we're over time. We have one last question. Says, so if I'm making $350,000 to $500,000 a year over the last few years as a one-man shop, what's the best way to get some kind of terminal value as I look to retire? And they said they're open to a 3-year thing or just walking away.
I don't know how to answer that question. I don't think it's there. You have 3 years. What lender wants to do something that you're out in 3 years and you're just a one person show? I mean, unless Bud and Jerry, you guys are thinking differently.
Well, again, you're selling yourself.
I'm,
You come with the deal. If it's a bank, you said it. You get a lower rate. You can do more business. If you're looking to sell it and walk away, good luck.
it's not going to happen. It's a very
No, it's
difficult.
not.
No. And if you're making that kind of money as a one man show, I'm just letting you know, from my personal experience, just keep
Be
on doing it for
happy.
the next 3 years
Yeah.
and retire because I don't see you making that much more in the next 3 years with that particular bank because
Yeah.
you're just
Don't
a one
worry,
man.
be happy.
Yeah, because they're going to look for extensive growth.
Yeah. Well, and like I said, there
And
could
it's
be an
just I
opportunity
just don't
just
see
to
that
sell
happening.
your
I could be wrong.
database and walk away, you know. So, all right. Well, I know we are over time and I know we could go on and on on this topic because there's so many different ways that people get into the business and get out of the business. And there's no one right way or wrong way, and opportunities come up and for different people. And so it's hard to give everybody the guidebook for it because it's so different for a lot of people. But I think from what I'm hearing from all of you, it's to start preparing early and make sure that you have as much volume as you can when you're getting ready to retire. Think about your staff if you have a staff. Obviously, if you have a portfolio, that's a different conversation. But I know a lot of our members, they may not have a portfolio and they're still looking to get some kind of value out of their business because it does have some value.
Yeah.
So I want to thank you all for being here. And if anyone needs your contact information, please give me an email. My email is mharper@hqtrs, and I'm happy to share your all's contact information if you'd like for follow-up questions. And I don't know if you want to give that out now or if you want me to just direct them to you, but
Yeah. If someone wants to call me, if they got a question, I have no problem with it. I can't speak for Chris or Jerry, but I'm fine with that. If you want to call them, say, how'd you do it? Or what do you think I should do? I'm fine with that.
Yeah, Monica, you give anybody my email address. I don't have an issue with that whatsoever.
Same here.
perfect. So if anybody wants to,
I'm more than willing to talk to anybody about what they're thinking about. We just everybody know I was in your shoes. I was a one man broker.
yeah,
Right. And no deal's cookie cutter.
It's not.
exactly. So again, for those who want to reach out to me, and I will connect you with them, my email is mharper@hqtrs.com. And I'm again so happy you guys could be with us today. And this, for our members, this will be recorded and put on the AACFB online education portal, and you can go back and watch it at any time. And with that, we will wrap it up. And I want to say thank you and have a great day.
Thank you.
Great. Thanks,
Bye,
Monica.
everybody.
Thanks, guys.